there. I hope you're having a fantastic day. I have a fun video ahead for you. I'm going to show you my exact option strategy that I use to make last month the most money I've ever made in my entire life. Last month I made $257,000 trading options using this exact strategy that I'm gonna show you right now. And I'm also going to take you step by step and even show you how to place these trades. So let's get into it. So I'll get started first. My investment thesis right now, and again, this is not investing advice, but I'll just tell you how I'm investing. I think that right now we are in the early innings of a huge build out for artificial intelligence. And I think it's just growing, and we're already seeing this, and you're seeing this with NVIDIA, you're seeing this with really, there's so many names that are part of this build out because there's actually a graph that just came out that are showing more data center square footage is being built now than office space square footage. And so it's a whole different paradigm right now, and there's a lot of companies that are seeing a huge tailwind to this. And so I think it's, what I'm looking to do right now is find companies that are still reasonably priced compared to what their forwards PE, what their valuation is, like looking forward to the next year and even beyond that. And then beyond that, I'm also looking at finding a great option strategy to capitalize on that. And what I'm doing is I'm selling puts. Specifically, I'm selling puts that are 30 to 45 days out. And I'm doing that at the 20 delta. And so what that means is that there's a 20% chance typically if you let that go to expiration at a 20 delta, typically there's a 20% chance that that comes in the money. That means that if I'm selling that, there's an 80% chance that it expires worthless and I make money on it. And so by doing that, and then I also put a 50%, I buy it back at 50% profit. And what that does is, so if I'm opening a contract at 30 to 45 days, and then as soon as it hits, let's just say like I open up an NVIDIA contract and I'm selling it at $4, I'll buy it back at $2. And what that does is that first 50% of profit goes a lot quicker than the second 50% profit. So I can close that trade at 50% profit, and then I'll just reopen it, and I can do it, at the next expirations or whatnot. So I'm going to break you down exactly how I'm doing this and which stocks I've been doing it on and why, and then I'll kind of take you through some trades, and I'll show you. So let's get at it. All right, share my screen. This here. This is my month last month, and so you can see that it was a gain of $257,000, and this is 81 different transactions that all close. Look at it, all for a profit, no losses. I had no assignments, so yeah, last month was an absolutely incredible month. And so, to take you through this, I'm doing it on a variety of stocks. Primarily, I'm doing it on NVIDIA. Why NVIDIA? NVIDIA right now is they're the main provider of processors for this AI revolution. And so, by investing in NVIDIA, I feel like they have a moat where it's going to be tough. AMD is their biggest competitor, and they still have a small fraction of the market. And NVIDIA is advancing so quickly that I just have faith that they're going to keep going. So I've made the majority of the money in NVIDIA, but I'll show you. Spread it out a bit too. I've done some in silver, which is not involved with the AI revolution, but right now you can just see like the U.S. is printing so many dollars, and so that's a little bit of a bet that the dollar goes down and that inflation keeps going up. And so far, actually, that silver bet has been great this whole year. Broadcom, they're also another person who, another company that are making chips. They just signed a big deal with OpenAI to make custom chips. Google, I've been selling puts on. They have, Google's Google. I actually feel like people are underestimating how big they are with artificial intelligence. Again, this is just my own opinion, but they already have the AI infrastructure. They already have the data center infrastructure. They also have all your data on there through Gmail. And so once they can get their AI game together, and they're already doing that, I feel like there's just some good tailwinds to them, and I feel like they're at a good valuation right now. I also sold puts on CoreWeave. They're like another company right now that they're called a hyperscaler, and a lot of these companies like Microsoft are making deals and with like CoreWeave and Nebius. Those are two hyperscalers where there are big build-outs. They're almost like an Oracle, where they're building these huge data centers. So right now, like CoreWeave and Nebius, they're projected to have a lot of growth. Right now, they don't have the earnings because they're spending a ton of money to build these out. And so it is a bit more speculative, and I'm just keep that in mind that they do go up and down more because it's on projected future earnings. And so, but so far, like, they have a very high implied volatility, which means that they have higher premiums, and it's been great to sell those. Taiwan Semiconductor, they're another one. They make all the processors that like NVIDIA makes. So they're at the actual manufacturing facility, and they have a huge moat where it's very tough for anybody to break that. Been selling some on Microsoft as well, on Oracle. I think I mentioned Broadcom, Nebius, Taiwan Semiconductor, yeah. And that's how we got to 81 transactions, $257,000 last month. So I'm going to take you through step by step, like how this strategy works. Again, this is like, I won't say this is investing advice, but this is just like what's working for me, and you can suit it for yourself, Now, so I'll take you through. So let's go into the options chains. We are in ThinkorSwim. Let's open up, we're in NVIDIA, and so these are the options chains. And so typically I'm selling it at the 30 to 45 day delta, at 30 to 45 days till expiration. So this is at 45 days, and this is a monthly one. So let's go take a look down to where the 20 delta is. So here's the column, the delta column. And so here is 20 delta, 175, okay? And so we see that there is a lot, like good volume, 819 contracts have been traded today. Open interest is 22,000, so that means that there has been 22,000 contracts that have been open before the day started today. So that's good to see that, sometimes you'll see some that have none, and you're like, okay, this is not traded that much. So you look, and the bid and the ask here, 4.05 to 4.15, is pretty thin, which is great. Sometimes you'll see, and I'll take you through some other stocks, where the bid and ask is big, and those are a little bit less liquid, and it's a little bit tougher to get in and out of those. So let's place a trade for NVIDIA. So let's just say we're going to do one put. So the 20 delta, let's just say we're going to do one put. So one put at 175. That means, let's analyze this trade. Okay, so what this means is that the most that we can make on this is $405, and that's what we collect up front. And then basically the break even is at 170.96. And then, yeah, I mean, you can see if it went down to, sometimes I like to look at like even like what the $400 to lose $400 here. So like the other end of this trade, 166, so yeah, anyways, so this is the trade that I put through. So let's do this. So what we can do is create duplicate order, and then we put it through. So we collect $400. Limit for the day 4.05. That sounds all good. All right, now that just went through. So now we have one contract for NVIDIA, December 19th, 175. Now, the other part of this, which is a big part, which I think is super helpful, is closing it at a 50% profit. So the way I do that is I see that this trade price was 4.05. So I go to the end here, I click this little menu, create closing order, and then I put that in. And then so what is half of 4.05? It's, was it 2.02? So 2.02. We do this good till canceled. So over here is the drop down menu, is good till day. That means that it's only for the day. We want to do good till canceled because it's probably not going to hit 50% profit today. So we want it to be good until it, for whenever it does hit that. Confirm and send. Yeah. And so basically, so we got $405 in that, from that, and then we will buy it back for $200, and then we'll get basically a $200 profit. And that's basically what this is. It's just like rinse and repeat, doing that over and over and over again. And yeah, and so I'll show you even some other of these stocks are a little bit less liquid. So for example, Nebius. So they're a hyperscaler, like I was saying. Their December, so you'll see there's a difference between monthlies, which are silver, and the weeklies, which are yellow. For less liquid ones, like Nebius, you'll see, look at this. Look how big the spread is. For the 121s, 20.3 to 23, 21 to 23.4. So that means and even here, 13.4 to 15.8. So that means if I sold one contract here, I would get $1,340. But if I wanted to buy it back, it's $1,580. It's a huge spread. And so, yeah, so for some of these, I will stick primarily with the monthlies. So I was going to put through a monthly on this, 85 or 90. Yeah, it's here's the 23 delta, and here's a 19 delta. So let's put through a Nebius at 85. Sometimes too, it's good to just I do this all the time, but I'll just show you for practice. So Nebius at 85. Okay, you know what? I feel like that's a good place to be buying, or excuse me, selling puts, because if you're forced to take assignment here, this I just know was when they announced a huge Microsoft deal. And so if it got down to the bottom of that day, that's probably a good place to buy. So let's put that order through. It's kind of a big spread. 5.1 to 5.5 is not as bad as the weeklies, but normally you can put this in somewhere in the middle. You could do this at 5.3 and just see if it gets filled. Oh look, the bid just went up to 5.3. So now it's actually a lot thinner. So let's just put it through at 5.3, and we'll just do one contract. So one contract, and we will get $530 for that. 529.35. Bam. All right. There's that Nebius contract. So, alrighty. Yeah, so that Nebius contract went through at 5.5. And so let's put through the 50% profit at, so we'll create closing order at 2.25. 2.25. Limit, always want to do limit orders. Good till closed instead of the day. Good till close, and that means, so we'll buy it back for $225, and then that means we're also keeping $225 once that goes through. Alrighty, and then there you go. And then, so I'll just keep doing that. And you know, the other thing that has been super useful, which I haven't seen anyone else do this or ever suggest this, but this like helps a lot, is to gradually, like basically create a ladder and gradually get into some of these positions. So like, let's just say you want to have, you know, 10 contracts of NVIDIA total. You can do like one today and then one tomorrow, or you can even spread that out, like one every few days or one a week. And that, so if, you know, a stock like NVIDIA goes down, you're not caught in a full position. You know, you're always almost like dollar cost averaging into that. So yeah, so that's what's working right now, and I hope that's helpful for you. And if it's something that you want to learn more about, definitely reach out to me or ask a question in my community, and I would love to support you however I can. Hope this helps. Have a great day.